We're running about 10 minutes late. I told Geoff as he was kind of getting ready that if he felt like he needed to go a little bit long, that's okay. We have a tendency to maybe be about 5 or 10 minutes late at this time in the day anyway. My real concern is that we are providing information that's like valuable for you. And I hope we're actually delivering on that. So um, Geoff is, I can see he's online. Geoff, I just actually had the pleasure a couple weeks ago, I would say, or I would say maybe like a month ago, it was right before Christmas, of going through his completely recorded trading course because I'm actually we're working on him we're working with him, I should say, to finalize some of the one of his methodologies into Metastock. And I would say this about his training course. It's very, very thorough. I thought his ideas were very unique. I was quite impressed with the training course by itself. And I've known Geoff for a long time, but this is the first time I've actually had the opportunity to go through his actual trading course. And it comes with high recommendations on my part. So, Geoff, I can see that you're online. Can you give us a little bit of a shout out?
All
You're
right.
on.
All right, great. Well, first of all, Geoff, I want to thank you for having me up after John Bollinger. I didn't even think about it until I was listening to his presentation. I'm like, wow, this is great, because one of the things I'm going to talk about is how we use Bollinger Bands. Now, that's a small part of what I'm going to show you in this presentation, but it is an important part. So if you like Bollinger Bands, you're going to really like what you're about to see here. And with that, let me just get started. Now, I start with this quote from Mukesh for two reasons. One, when I do a presentation, just like John said, I really hope that you will walk away from this presentation with either something that you can use literally in your trading the next day, or with a new understanding or insight into why the markets do what they do. And in today's presentation, I'm going to be showing you something that often causes traders an aha moment in the way in which they previously couldn't figure out why the markets would make these weird turns, or why support wouldn't hold or resistance wouldn't hold. And now, after they see what I show now, that it's going to make more sense. The other reason I like to show this quote is because Mukesh used the term frameworks. And I'm going to show you a framework for looking at the market so that you'll be able to see trends that currently you can't see. And so that's why you're going to be able to do what the title of this presentation says, which is how to identify and profit from the market's next big winners and avoid the next big losers. So first of all, how will we identify the market's big winners? Well, they're market-leading stocks that have two trends that enable them to move to the beat of their own drum, right? So how are we going to identify and avoid the market's big losers? Well, in a minute, you're going to discover these two hidden trends in the market that are literally sabotaging your trading success, kind of like what I just described a few minutes ago. But don't feel bad, because it's not your fault. You see, you can't see them yet. I'm going to show them to you in just a minute. So as a result of this webinar, you're going to learn two hidden trends that the pros focus on that you can't see yet. You're also going to learn three conditions that you should know before buying or selling any stock to maximize your trade's potential. I'm also going to show you which stocks are at the greatest risk of collapsing even if the market moves higher, and which stocks have the greatest potential to lead any bull market higher or bear market lower. The result of this is that you'll see the best trade setup for simple but explosive trades. Now, I say it's perfect for options because the way in which it identifies things at key inflection points. And of course, it's also going to work for stocks too. Now, this little pattern, the secret of these trends, all begin with a really simple pattern or indicator that is a blue line over a red line. Now, I'm going to build on this, but if all you understand is that when the blue line goes over the red line, it's bullish. When the blue line falls under the red line, it's bearish. Now we're going to have varying degrees of that, and we're going to have specific patterns, but let's just get started with that. Now, once you understand what the blue line and the red line represent, you'll be able to identify breakouts and breakdowns that you should follow for explosive trend trades. You'll also be able to identify pullbacks to enter for low risk trades. And you'll be able to identify bases that you should buy for big, long-term, and what some would consider surprising trend trades. And you'll be able to identify tops that you should sell to avoid painful disappointments or profit from shorting them. Now, as you may have noticed in those charts, and we'll see more charts in the presentation, this will apply to all different time frames. It works on the weekly charts, so you can see the biggest trends with a unique and powerful perspective. I focus primarily on the daily charts because you can keep it simple with only the daily charts and identify trend trades that last a few days to even several months with incredible accuracy. And it also works on intraday charts to show you trend changes before other traders even know what's happening. So imagine you could apply this to any stock or ETF. You see, the most powerful and rewarding trades are the ones you can enter confidently before the crowd. You could enter on a breakout before everyone else rushes in, or you could buy that pullback when other traders are waiting for the recovery to look safe, or you can get in during a base before it looks like the market is even ready to move up. And perhaps most importantly, you'll know how to exit before the market collapses. So we've created this webinar to share my favorite method for identifying these great trades. And it'll help you become a much more profitable trader as soon as tomorrow. Now, I use the term we because I'm the one presenting here today, but what I'm going to show you is really based on Market Gauge. And Market Gauge has 3 partners. We've been around for 20 years, since 1997, and we've been dedicated to helping people like you learn how to actively trade or invest safely and profitably. Our passion is finding better ways to profit from trading through automated trading systems and simple but professional caliber rules-based trading systems and strategies like the one I'm going to show you today. Our mission is to provide an environment and a resource where anyone can benefit from decades of trading experience and from our passion to simplify building wealth and income through the markets. Now, these 3 partners have over 117 years collectively of unique trading experience, and we also have a dedicated staff working to help you reach your trading goals. So just quickly, Keith, my co-founder and partner, turned $10,000 into almost $1 million, 996,000 to be more precise, in 18 months as a floor trader in the gold market. And then he went on to build one of the first market analytics platforms. This thing actually had Windows before Microsoft Windows. And he's also managed money for one of the biggest and most successful hedge funds in New York, Millennium Partners. Now, he met his wife, my other partner, on the floor. She was a floor trader also and a market analyst for some of the biggest firms. But she's got the unique quality of having a master's degree in special education, which she's used throughout her trading career to work as a consultant with school districts on modifying curriculum for kids with special needs. She's also was named by MarketWatch as a top Twitter account investors need to follow in 2017. And myself, I've been trading with Keith since 1990, so 27 years, when I started as his assistant on the floor. I then became a seat owner myself, traded as a floor trader in futures and options. I also managed money for Millennium Partners along with them as partners, which is a quant-based hedge fund where we developed a lot of the indicators like the one you're going to see today. And since then, we've developed numerous applications, trading systems, and training courses to help thousands of traders trade with the professional edge. Now, when I say a professional edge, our tools and information have been on professional terminals such as Reuters, Bank of America, Fidelity, Bridge, Barron's, Townsend Analytics, ILEX Systems, and ADP. So I really do want this to be you by the end of this presentation. I hope you'll also be saying, that we've been a major help and you're already using the information. Now, in this case, Keith was using it to sell vertical spreads. You don't necessarily have to do it with options. Now, unfortunately, I know that not every presentation is for everyone. So this is for you if you like to swing trade or day trade stocks or ETFs or options or currencies that are about to make big moves. I'm going to show you how to identify stuff that's about to explode. So if you're interested in something just sitting there to collect premium, this is not the right place for you. This training is definitely for you if you're committed to evaluating trends like a pro using charts that other traders don't have. All right, so if you commit the next 45 minutes or so, I'll share indicators and trading tactics that you can profit from as soon as tomorrow. And you'll leave this training feeling empowered like the other past attendees. And as a bonus, you're going to discover what Metastock can do that no other platform can do for you. So here's how the pros know what you can't see. You see, there are two trends, and I'm going to call three conditions that you should know before you get into any trade, and you should be looking at during your trade. The first one is leadership, and leadership is really what the true price trend is. What you want to know about a trend is whether or not it's leading, following, or even moving in the opposite direction of the market. The second thing you absolutely should know is volume, but not just any analysis of volume. You want to know whether or not your volume has a true volume trend that's supporting the current price trend. And finally, you want to know what the volatility measure is. You want to know if your trade is trending, if it's overextended, or it's consolidating, or it's getting ready to move. Now we're going to talk about each of these individually, and I'm going to show you how you can see them in a unique way. But the reason that I'm putting all these together is because the right pattern with these three conditions in the right place equals big profits. So if you've got leadership, if you've got volume, and you've got volatility, that's where you're going to find big profits. And so those three things add up to what we call triple play trades. All right. So a quick warning. If you look at the trends that you see on the average chart, you're missing half of the most important picture. All right. The pros look at the markets differently. The pros look for trends that have their own momentum over and above what the general market is doing. Right? You'll hear these described as leading stocks or leading sectors. And leaders tend to continue to outperform for long periods of time. That's why we want to focus on them. So what do we mean by leadership? Well, first of all, you've probably heard the expression that 70% of a stock's move is from following the general market. So if you're not trading a leader, then you're just going to get whipped around by the market. But if you are trading a leader, you can buy dips confidently because they get pulled down by the market, but they recover faster and bigger. Leaders have the best moves after market sell-offs. Now, how do you find them? Well, a typical way to find them would be to look for 52-week highs. That's one of the ways I first started looking for them before I have what I have now. And you know what? This works great. It works really great after market declines. But it's not as easy in a general bull market when you've got lots of new highs. And do you really want to be limited to buying new highs? All right. One of the other ways to find leaders or strength and momentum is by using a relative strength ranking system. Now, James O'Shaughnessy wrote the book, What Works on Wall Street. Now, James O'Shaughnessy, if you're not familiar with him, is not just an author. He happens to manage about 6.5, maybe 7 or plus now $billion. In his book, What Works on Wall Street, he covers probably hundreds of different strategies, and he looks at them with an insane amount of empirical evidence. And one of the most compelling conclusions he came to was the power of momentum and relative strength ranking. He writes, price momentum proves to be an especially good way to identify those stocks which go on to perform well and those which go on to perform poorly. Over 6 months and 12-month periods, winners generally continue to win and losers generally continue to lose. So in other words, if you are in stocks that are leaders with momentum, those are the ones that are going to continue to exhibit a strong trend. But the problem is, how can you get this type of edge while just looking at an individual stock? And what about ETFs? And how can you time your way into these things, which you need to do for options? Well, how can you even find them? Well, one of the ways to do it is to look at places that have these ranking systems. So Investors Business Daily, Value Line. The problem is, I've done it. It's not that easy. You wind up compiling all these lists that you then have to follow. And you really can't see one of the most important things, which is how is the trend in that ranking changing? So I spent a lot of time trying to find an indicator that would help me do this, and I couldn't find it. So I built it. I spent a lot of time building it too, but in the end, as you can already see, it was actually quite simple to use, the blue line over the red line. And it has almost an amazing ability to see things coming before they actually happen. A great example of this was before the election, the presidential election. There were certain industry groups that were exhibiting an unusual amount of leadership. And one of those industry groups happened to be the financials. So here's a chart of Bank of America. Now remember, all you have to do is look at the blue line, which is a short-term measure of leadership, versus the red line, which is an intermediate-term measure of leadership. Now, the black line is a longer-term measure of leadership. So you can read it just like you would read, say, a moving average. All right, when they're stacked, when the one's moving up, moving down, and you want the blue line to be above the red line. Now, I'm going to, for the sake of this presentation, show you very simplistic ways to use this and just assume that all you do in terms of your price action is look for significant support or resistance to break or hold. And you'll use your leadership line to tell you whether or not you should anticipate the market is going to break the support or resistance or hold the support or resistance. And if it does break the support or resistance, whether or not you should follow it. All right, so in this case, Bank of America, this green line here is a 200-day moving average. The question would be, should I anticipate that this break of the 200-day moving average is going to hold? Well, if I look at my leadership line, I can see the leadership has been really strong, blue over the red, as it came through the 50-day moving average, the blue line. Now it's coming through the green line, the 200-day, and it's still strong. So it's got a strong leadership trend. I'm going to expect that it's going to continue to move higher as it did. Same thing happens on this pullback. So here's the pullback to a 50-day moving average. As soon as you see the leadership moving up with the price moving up, you have an opportunity there to be a buyer as the market starts to rally with confidence. And even here, you got a second chance as it pulled back to its 50-day moving average and the leadership line didn't even budge. Now, most of the market looked pretty terrible, if you recall, leading into the election. And ironically, the financials were one area that were expected to not do so well. However, the leadership line was telling you something completely different. The leadership line was so strong that I went out on our blog and posted before the election that the financials are likely to rally regardless of who wins. Now, how far the market actually rallied due to the actual outcome, I'm not going to try and figure out. But clearly, the leadership line was right in the fact that the market rallied incredibly, especially in the financials after the election. Right, so you can see that in Bank of America's stock. Well, you can also see it if you had been looking at the XLF, the financial spider, same basic pattern. While the market was just going sideways, even pulling back into the election, the leadership line was strong. So that gave you plenty of time to see that if this breakout occurred, it was one that you would want to follow. All right, can you see how straightforward that is? Does everybody see? We're going to get to the blue, more details about it, but can you see blue line over red line? Look for the breakout, trust the pullbacks. It's as straightforward as that. All right, so another example of sector rotation or a sector move, let's say, occurred in the XRT. Now, this is the retail ETF, which for 2017 was most of 2017 was basically the dog of the market. It just couldn't get out of its own way. But in the summer, it started to really perk up, and I began looking at this as a potential bottom. However, from a price point of view, it really didn't have any reason to believe that should be the case. And from a leadership line, I really didn't have much of a reason to believe it either until we got this. So the leadership line turned up at the same time it was breaking the 50-day moving average, and I started to suggest that this could be a bottom in forming. Now, when it got up to the 200-day moving average, the leadership line looked good until it paused. And when it paused and started to just hang out and consolidate, what happened? The leadership line went back under the red line, telling you it's not time yet, all right? And back down the XRT went. Now, a few weeks later, the XRT leadership line turned positive as it was breaking up above the 50-day moving average. And then you got this nice consolidation above the 200-day moving average. Now, when I saw that consolidation, imagine what I was thinking. Leadership line has now basically twice looked to move higher. And if we break out here, this is one we should follow. I'm over the 200-day moving average. I've got a nice consolidation. If it breaks out, I should go. Are those simple enough patterns? Do you guys see those the basic patterns in the price action? And now I know which patterns I should trust. Yes, okay, great. So you guys can see it. So I know which patterns I'm going to trust and which ones I'm just going to pass on, because I know that there's this hidden trend behind the markets that really determines whether or not the markets are going to continue. Now, the way you really leverage a sector move like that is that you then go look at individual stocks. So here's Kohl's, a retail stock that, like the whole industry, had been pretty battered and had now had a really substantial base. So how many of you would like to be able to look at bases in the market and know which ones are worth paying attention to and which ones you're going to follow when they move higher? Well, look at how the leadership line during this whole corrective period down back to the 200-day moving average under the 50 said negative, negative, negative until it turns higher here as it's breaking over the 50-day moving average. So again, even if you were to use something as very basic, what we call phase changes, a move over the 50-day moving average with a tight stop under the 50-day moving average, and you did that with the confidence and the selectivity of only doing it with positions or trades where you've got strong leadership, and you'll wind up catching much stronger trades. And not only that, when you know you've got the wind at your back here, you're much more likely to hold on for these longer moves because you can see when they're likely to start to get weak, even oftentimes before the price does, which we'll see in a second. All right, so one of the ways you'll see when they get weak is when the blue line goes below the red line. So there's two things I want to really emphasize on the weakness part of this. And that is, you can often see, and this is a really good example of a situation where, say, ExxonMobil still looks really good in terms of price performance here, right? The red line is a 10-day moving average here. All my moving averages are simple to answer that question. It is not, this has nothing to do with the MACD. So on Exxon, it continues, it looks like it's continuing its uptrend. This looks like a pretty harmless flag back down into support, but it's not that harmless if you look at the leadership line already falling apart. Now, the way that I would use it is I wait for the market to actually break the support, and I know that I'm not going to trust the support's going to hold. So in this case, will the support on the 10-day moving average hold? I'm thinking probably not. Will the support, if it gets down to the 50, hold? I'm thinking definitely not. All right, so now I know which stocks. Sometimes, as I say, you'll get the warning even before it starts to roll over like you did here. Sometimes you wait until the support gets touched, and then you know whether or not to trust it. And in this way, you can avoid these ugly sell-offs. And more than that, when you have the confidence to know that things are about to get worse, wouldn't that make it easier for you to take profits? Wouldn't it make it easier to say, I'm going to go look at another opportunity? Wouldn't it make it easier to just spend a heck of a lot less time trying to figure out what's going on in the price action if you know that there's an underlying trend that's kind of going against what you want it to do? So here's on the right side of the screen is an example where you had what looked like a pretty good breakout, and admittedly, even the leadership line suggested that this one should continue. But as it started to consolidate, the leadership line got more and more negative. When it pulled back to the 200-day moving average, which any normal technician would have easily said, this is great support in here. But the leadership line was completely falling apart. So any break of that area of support into what would have looked like even more support should have been an obvious get out of Dodge moment, right? And it just fell apart. All right. So here's another example, again, going back and forth so that you can see that it's not just stocks, you can use it in ETFs too. And if you're an options trader, hopefully you can see that this is going to enable you to identify those inflection points where the market's likely to either resume its trend or break its trend. And you can see it coming oftentimes for weeks or months in advance. So here's the IYT, right? Again, right after the election, markets really took off. Some stuff continued to go, some stuff petered out. So here's an example of a petered out, right? It started to pull back and the leadership fell apart pretty quickly. Right now, the leadership did start to make a bullish approach here, but the market wasn't able to break out to new highs. And then when it was finally able to break out to new highs, the leadership was clearly negative. Now, if you wanted to discount the leadership and say, you know what, I'm buying this breakout anyway because I like the way this price pattern looks. Okay, fine. But just do yourself a favor. Do me a favor. If it pulls back and you've got a lousy leadership line that never followed the price action up, get out of the way, all right? Because you're going to run into something like this, all right? Now, price leadership was only one part of the equation. And I was a huge fan of volume, absolutely huge fan of volume. And I always thought, and starting on the floor, I was immediately exposed to the professional point of view. And one of the professional points of view about volume is what? It leads price. The problem with volume, all right, is that when you use it correctly, you can really improve the percentage of winning trades. And when you can do that, it's incredible. And when you see somebody who can do it, it's really it's enticing. But I have to warn you, if there was one indicator that I would tell the beginner trader to avoid, it would be volume. And this is why. The way traders analyze volume, the way it's typically taught to be analyzed, is just dangerously misleading. All right. So I want to show you how to use it properly. I went out, because I'm fortunate enough to have somewhat of a programming background. So I was able to spend a lot of time programming volume indicators to really figure out what was helpful and what was just eye candy. All right. And so the most important thing about volume that I found was really its trend. And it's impossible to figure out volume on a bar by bar basis. Right? Now, if you're a really savvy pro and you've been looking at it for years and years, then yeah, maybe you can. All right. But 99% of people should just not waste their time trying to figure out volume bar by bar. All right. And always use it as a confirmation, not as the trigger. All right. You always want to follow price, not necessarily volume. And as I'm saying, you want to be able to see in some way what the trend of volume is. Now, as a bonus, for those of you who do want to follow volume, volume will often precede price. That is true. I first heard it from the pros on the floor. I actually first heard it from the pros on the floor on the New York Stock Exchange. I was fortunate enough to spend some time there while I was in college. So it is true that that happens. It doesn't always happen, however, so you need to use it as a confirmation or an early warning signal, but always trade the price. So here's what I mean. This happens to be Amazon. I like to trade Amazon, so most of the charts that I'm showing you are stuff that I'm in or was in. And so if you were to look at Amazon as a daily chart, as after this earnings report, and it's kind of working its way sideways, a little, attempt to go higher here and then a ugly kind of correction back into here, but for all intents and purposes, really not making a lot of progress. And if you look at the volume during this period and try and figure out what's going on, I don't know how you can figure anything out, right? There's no real insight into what's going to happen next. Now, I now have two charts here. Here's our price leadership on the top, the market gauge trend performance. Now, in this case, the leadership during this period really isn't bullish. It's not that bearish, but it's not that bullish either, right? But the bottom chart here is the volume trend. Now, the volume trend works exactly the same way as the leadership in the way you read it. It did that intentionally, so once you know how to read one, you can read them both. If the blue line is over the red line, bullish, all right? You want to see the blue line get substantially over the red line. You want to see it spend some time over there, and the more time it does, the more bullish it is. So in this case, if you're looking at the volume trend line, you can see that all during this phase in here where bar by bar and price action is pretty hard to figure out, you can see that the volume has been positive the whole time, with the exception of a small period in here, understandable, as it pulled back on big volume. But it snapped right back. Its volume snapped right back into a positive trend, even though the price action wasn't all that impressive, right? Now, by the time you got to the point where price action had a positive situation on leadership, volume has positive situation, and you're breaking out of a multi-week consolidation, now it should all come together, right? This was, in my opinion, a no-brainer. Okay, I had already been long the stock. I bought options. All right, so I'm long the stock because, like I said, I like Amazon. I liked it. You can see why I would like it in here. You can see why I would like it in here. And then when it pulled back, this is a little bit more advanced, is not bullish, right? Not bullish, but as soon as it started to pull back up, this is a pattern I look for, the 10-day pullback. So I bought the stock in there. But when I saw this, I couldn't resist, bought some way out of the money calls. And I'm going to show you, actually, next slide. So when I say you can use this for options, I'm saying that because I do it. So this is actually a screenshot of current positions in Amazon. I bought the 1,500 calls down here. Now, why would I buy the 1,500 calls when things trading 1,200? All right, this is incredibly powerful. Now, I didn't expect it to go up this quickly, right? I've got the Aprils, but those calls, even if you only, those 388, all right, so $400 for one, $800 for two. They're now worth $8,700, 1,000% return, all right, in a couple of weeks. Now, you're not going to get that on every single trade, but there's two parts to this. One, it's Amazon. You need to have confidence, in my opinion, to be able to trade Amazon. Would this, now that you know what I've shown you, give you more confidence to stick with it? All right. So someone's asking if the volume indicator has anything to do with options. No, it doesn't. I only show you the options trade because a lot of times people see me only focusing on the stocks and wonder how you trade the options. When I trade options, I look at what the stock is doing and I trade the option as if it was the stock. So I didn't want to lay out $1,200 for more shares of Amazon, even though I've told you I'm already long some of the shares. I just wanted to get more exposure to Amazon, and I could do that with options. All right. Had it come down and taken out the lows here, this support, I'd be out of my options trade, probably still in my stock trade, but out of the options trade. All right. So that's how I use it. All right. Just want to show you the opportunity with really being able to time the breakouts that could get explosive. All right. So back to the retail. All right. Now let's take a look at it on with volume as well. Now, the thing that's interesting about the retail is that when I started to get interested in XRT, you can see I shared with you that I saw the leadership, but I also saw the volume. Okay. And when we started breaking out here, look at how the volume really preceded this price breakout. I didn't get it. I didn't understand why it was happening, but obviously I understand the indicator enough to know that something was going on here. Well, ironically, the Wall Street Journal in the beginning of December, somewhere around here, came out with an article that had a huge graphic display of all the industry groups ranked by their effective tax rates. Now, why would anybody care about that? This is all happening before we have the tax legislation. And the retail industry was the top of the list for the highest effective tax rate. So in other words, the smart money was betting that the tax plan was going to get passed and that the retail industry was going to be a huge benefactor of that passing. This is all makes complete sense now that we look at the indicator. All right. So my point here is that there's a lot of information, and I probably don't need to explain this to most of you. There's a lot of information that's in the market, in the professional space, that we as individual traders will never hear about. But the leadership trends, the volume trends, these big guys can't hide if you know what to look for. All right. Now, I'm not going to suggest that these indicators will show you inside information. All right. Not suggesting that. I will, however, say that they will show you when there's a trend underlying the market that you're not necessarily seeing in price, but you do see it in volume or you do see it in the leadership. All right. So again, here's the retail coals. You can see the volume. Now, volume came in way before the leadership was obvious. So when you put these two things together, it's incredibly powerful, all right? Incredibly powerful. Now, there's one way, actually there's several ways. There's a lot of ways to take these two indicators and then make them even more powerful. And one of those ways is by using volatility. So even if you just use the simplest approach to measuring volatility, you can find these obvious opportunities that lead to massive trend trades, the triple play trades, all right? So the warning here is that if you only consider the absolute price level, again, you're missing half the picture. So when I talk about volatility, I don't just mean, is the market moving up and down a lot? I want to look at volatility in terms of it as opposed to just looking at relative price performance. So what you want to be able to measure is whether or not your trade is trending or the trend is trending, or whether it's overextended or consolidating, or whether it's getting ready to move. Now that's a lot to handle, all right? And as you're going to see in a minute, the easiest way to do this, the most effective way to do this, is Bollinger Bands. That's why I said at the beginning of this that I was so happy to go after John Bollinger. I love his stuff. All right, so this is a way, if you take these price leadership and this volume leadership and you combine it with Bollinger Bands, and I'm going to show you that, you've seen it on my charts the whole time, right? It's incredibly powerful. Now, I'm going to focus on the it's getting ready to move part, because it is, I think, just the simplest way to get started. There are other ways, but it's the simplest way to get started. And not only that, what you'll find is that if you look at these indicators, even on a weekly basis, they will give you incredible insight and confidence into knowing which way the market's going to go. So I know there are definitions out there for squeeze, all right? Other traders have specific quote unquote squeeze patterns. I'm going to call this a squeeze too, but I'm just describing what it looks like. So if you take a normal Bollinger Band, right, no special settings, look at it in terms of price, and you see that the bands are, because there isn't a better term, squeezed, they're just narrower than they normally are, then that market is getting ready for a move. Now, if you combine that with which way is the price leadership and the volume telling you it's going to go. Now, it's the leadership and the volume trend are not always going to have a quote unquote opinion, right? But if you see a situation like we see here in Amazon, now this is a weekly chart, right? And the leadership is looking bullish. The volume, as I've just described to you, has been bullish ever since this earnings report here. So now can you see even more so than earlier why I would load up on way out of the money calls, all right? Someone commented on it being only a few shares with two calls in Amazon. It's true. It wasn't really much. That's why they're only $400 each, all right? But now they're 1,000% higher. Now, if you want to trade more size, feel free, all right? But the way I look at it is I took probably a $200 to $400 risk, and now it's worth over $8,000. Now, again, I wouldn't have been able to do that and hold on to it with the level of confidence if it weren't for the fact that this was essentially a classic triple play trade, right? And like I said, with the stock also, haven't even had one inkling of a desire to sell it, all right? So even if all you do with Bollinger Bands is look for the squeeze, combine it with the leadership and the volume, it's an incredibly powerful thing, all right? So, and as we just saw, Metastock will scan for the Bollinger squeezes. His package will do that for you, all right? Now, here's an example of an Apple squeeze. And again, this is a weekly. So why am I showing you weeklies? Because sometimes I think it's just, I don't want to say better, but it's a good idea to step back and really look for the big opportunities. They give you plenty of time to see them coming. So this squeeze, you can see this squeeze coming for weeks, months even. All you have to do now is wait for the right time. And the right time will be defined by the breakout and a good looking price and volume leadership, right? Is that easy to see? Because it's really important for me. I don't know about you, but for me, when I'm using indicators and have basic rules to apply the indicators and trade around the pattern, that it's easy. Because if it's too complicated, if I have too many things to look at, it's too easy to talk myself out of it or into it. So there's basically 4 criteria here. What's the Bollinger? Do I have a squeeze? Is my leadership obvious? Is my volume obvious? And am I breaking out of support or resistance? If I get a yes on all those, I know I love it, all right? If the Bollinger Bands don't have a squeeze, okay, That's just not a squeeze pattern. I'm down to 3 criteria. All right. So here's a daily chart. So here's something that could have easily been interpreted as I'm consolidating on top of the 50. Looks like it's turning up, and all I have to do is break out of the 200. But the triple play indicators are telling you something completely different. And then when it breaks down, should I expect this support to hold? Absolutely not. Leadership's already broken down, volumes pushing to the downside, and nothing bullish about it. And as a result, the thing pretty much falls out of bed. All right. Now, they're not all going to fall out of bed like that, but you definitely don't want to be long this thing, right? Does that make sense? Here's another daily pattern. This one's on Home Depot. You can see the squeeze in here for weeks, right? It even tries to break down to the downside, right? When it comes back with a big volume bar, a big price bar, your price leadership is already in gear. Your volume trend is already in gear. And then guess what? You have 3 days of consolidation to decide if you like it, or even better, to use that as your stop and know that you're going to buy this breakout, because by the time that thing breaks out, look at what your leadership looks like and your volume looks like. I like to take the approach of, if it doesn't look really obvious, go find another one, because it's not that hard when everything is this straightforward. All right. So, quick review. Before you trade, check the 3 conditions. All right. If you have all 3, especially with the squeeze, as I said, the squeeze is just probably one of my favorite patterns that are triple play. There are more. I'll show you in a second. But take that price leadership, take that volume, and apply it to general patterns, general price and volume support and resistance, and you'll be way ahead. All right. Now you just have to look. Do you have good leadership or good volume, or are you missing them? Right. If you're missing one of those, then you're really running the risk of that trend breaking or the pattern failing. Right. And as I've just said, the best trade is when you've got all 3 of them set up right how you want them. Now, I have a quick quiz for you. I have the quiz because I want to see whether or not you get it. So what I've done here, really simple, is I've hidden the name of the stock, and I'm only showing you a small part of the chart. And what I want to do for you is, you tell me, now that you know what you know about price leadership and about the volume trend, whether or not you think this stock, which has gone through a downtrend, it's under the 50, but now it consolidated and come back up through the 10-day moving average. Make this really simple. Just put in buy, sell, hold. Buy, sell, hold. And there's a squeeze. Yeah, someone. All right. I know you guys, I actually, honestly, wasn't even focused on the squeeze for this, as you're going to see. Now, please pay attention here, because I don't want to spoil the surprise, but many of you are going to find by the end of this, you're going to be shocked at what stock this is. So just be prepared. So right now, everybody's saying buy. Come on, I could not have done that good of a job. And quite frankly, I don't remember all these squiggles. So I'm actually playing along with you. All right, it's moved up a little. Now it's breaking above the 50. So you got in early. You all did, because you all said buy. You got in early. It's going over the 50 now. Let's say you missed it. Is this something you want to follow as a breakout through the 50? Buy, sell, hold. Buy, sell, hold. All right, you're all still buyers. I'd be right there with you. We got great separation on both of the lines, and you basically caught the beginning of a pretty nice trend. Now, I didn't want to use something that was picture perfect. All right, so in this case, you got off to a great start, and if you were a buyer down in here, no problem, right? You had this one day where it kind of got whacked, but it came down and sat on the 50-day moving average. So this isn't part of this training specifically, but one of the things that I'm a big advocate of, and I say this in almost every video that I make in our mentoring programs, when you get a bar or one day that is a big day or that it breaks important support, always wait for it to continue, right? So if I got caught in this big down day and ended up at the end of the day still long this thing, I would say, you know what? I'm in it. It still looks good here. I'll give up when it gets out, takes out under here. Or sometimes, kind of like I got into the Amazon trade, I would look at it and say, this is that one day head fake. What does it look like? If it breaks out above here, I want to be in. All right. Now, in this case, it still looks strong. Now, there's a big gap, so you couldn't have gotten in. But my point is that you could have held through this, and the trend continued to move higher. But when you get to here, you're now under the 10-day moving average. Buy, sell, or hold. All right. Buy, sell, or hold. Everybody wants to sell? Holy cow. All right. I agree with you. I'm saying holy cow because I guess this has been explained. All right, so sell, good idea. Now, even if you were just to say, you know what, I'm going to not hold it if it gets below this support, I expect the support to break. It breaks. 50-day moving average slices right through it. All right. Now you can kind of wait to see what happens. Now it's back up over the 50. So if you had sold it in here, right? So if you had bought it back here, sold it here, and had the patience to just wait for the indicators, you're basically right back to where you would have sold it, right? And you didn't have to sit through all this. You didn't puke it down here. What would you do now? Buy, sell, or hold? Breaking over the 50. I wouldn't call this a squeeze. Breaking over the 50 with the band, with buy. I want one more bar. I like that. Keith, I think it was Keith, scrolled up pretty quickly. One more bar. That would be good confirmation. I agree. Well, Keith, you probably would have gotten your bar and it kerplunked on us. All right. But again, look, if you got caught in that gap, again, this isn't part of this training usually, but stick with it. All right. Now, in this case, this is kind of neutral now. Oh, I shouldn't have said that. Buy, sell, hold. Buy, sell. Tell me what would you do? Buy, sell, or hold? All right. So here's one thing. I would definitely hold if I was already in it. If I wasn't in it, I'd be saying hold, but I would be really, I'd be waiting for this to get to pick a direction. I didn't give anything away necessarily, but these, in this situation, you're not getting a strong indication one way or the other. Now what? All right. Now here's classic. Here's classic. It's up too much. I can't buy it here. All right. Easy to say that. You could say wait. You could say at what I would like to hear, and this is what Keith said earlier. Keith, someone in the audience that is, wait for confirmation, right? Same thing I'd say about on the downside, wait for confirmation, yes. But fearful of buying something, this is pretty strong, right? So people are saying one more. So it leads to a pretty significant move higher. Now it starts to consolidate. Buy, sell, hold. You guys really are on top of this. I can't see if it's the same people answering all the time because it scrolls up so quickly. But the group is all on sell mode. And you know what? I would agree. Anybody guess what company this is yet? All right, so I would say it was a good idea to get out of the way. You don't have to sit through all this. Now, this thing is trying to make a new high. It's trying to break out. Buy, sell, hold. Elton, no fair, Elton. You've been to so much of our stuff. I think you know. I think you know. All right. Buy, sell, hold. I got some sells. I got some holds. Good. Yeah, no, this is not a breakout I would chase. I totally agree. Even if I was wrong and it took off, I wouldn't regret it. And here's why. Because if this turns out to move higher and these turn up, I can buy it higher and feel better about it. All right. So it was a good thing that we held, but it managed to hold the 50-day moving average. But look, it got worse in here, right? Got worse, and now it's even higher. It's out to new highs now. Buy, sell, or hold. Take profits. Okay, that would be a good answer too if you were long. Hold, 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 hold. All right, great. Well, we're obviously getting to the end of this. Can you guys see how this is gives you so much more insight into what the market is going to do with just simple. So someone's saying squeeze. I wouldn't overthink this. To me, this isn't that squeezed. I like to see them really tight. Okay. Good thing we didn't get sucked in to that top, right? This is current. Buy, sell, or hold. This is their last buy, sell, hold. Certainly not one that I want to be trusting on the 50-day moving average. All right. Now, I will say that this is going to come out with earnings next week, and earnings can change everything. This won't predict earnings. All right. But earnings aside, this is not the stock that so many people think that it is. Okay. So with that, I am going to show you that it is Apple. Now, I have nothing against Apple. I love Apple, and these indicators work great on Apple. As you've seen, I've used it as an example more than once, all right, because they just work great on it, all right? And some of you did guess it, that's true. But the reason I used Apple was two things. One, because the progression, could you see how you could really see so much better which way the market was likely to go in terms of support and resistance? And two, Apple is one of those stocks that people just get so emotionally attached to that it's Apple, it can't go down. All right. I'm not predicting the top of Apple. I'm not predicting anything really crazily negative about Apple. But as a trader, this is absent earnings. If you know what earnings are going to do, then great. But I don't. And absent earnings completely changing the picture here, this thing is, as you can see, horribly positioned. All right. So I wouldn't know that if it wasn't for these indicators, and you can see how easily these indicators bring it out. Now, the problem is, or the opportunity is, that right now there's a lot of stocks that look like this. All right. And the market's in a roaring bull market. So you don't want to miss an accelerating trend. You don't want to get caught in stuff at the wrong moment. Now, I've only been able to scratch the surface. All right. There's a lot more to patterns you can use this for. It gets a lot better. And so I'm going to give you the opportunity really quickly here to discover more secrets and trading strategies of triple play. And the way you do that is with our triple play advantage trading course. All right. Now, in that, you'll learn tactics to minimize your risk. You'll learn more patterns that are specifically for intraday trades and day traders. And you'll learn rules for applying these indicators to patterns you may already be trading so you can improve your percentages. There's 3 hours of instruction, streaming video, so all you have to do is log on. You get lifetime access to the course, and you'll get all the details for 6 different patterns. I didn't even really talk about patterns other than a squeeze pattern. I just showed you with basic support and resistance what you could do with these. Now, normally this would be $6.97. If you just went to our site and bought it off our site, you'd pay $6.97. Now, in addition to that, you're going to get the indicators. Now, with Metastock, it's all programmed into Metastock. I was using Metastock charts. You don't have to do anything other than be a member of Triple Play, and then it'll all be enabled on your system. Right now, the indicators, if we were to sell them alone, we would sell them for $497. All right. Now, in addition to the $697 course and the $497 value for the indicators, I've got a bonus for you because I want to make sure that you're able to use these in all different market conditions and really accelerate your learning to make your trading easier. So what if I handed you stocks and ETFs that have great triple play conditions? Well, we do that with our member area. And in our member area, we scan for stocks in bullish and bearish situations, and every day update a list for you. Now, in addition to that, you'll get a weekly mentoring video where I pick stuff off the list and show you why I like it, what I would do with it, stops, targets. And so in this way, it's like looking over my shoulder to see how I prepare for the next day. Now, this particular service, the alerts and mentoring, is $97 a month. But I'm going to give you a full year, $1,164 of value as part of this package. All right, so for the course at $697, the indicators at $497, and the $1,164 mentoring and alerts, it's a $2,300 value. All right, but in addition to all that, you also get special access to a live Q&A. So every month we do a live Q&A. You can ask any questions so that you can really master these indicators. And if you register now, we'll give you lifetime access to these live monthly sessions. You can ask any questions you want in all market conditions. And in this way, you can get personalized help, make sure that it works for your style of trading. So this special package you can get for not $2,300, but $497. Right? All you need to do is go to the special link, metastock/triple play. Now I've got a couple of other bonuses here for you that will be included in that. And I'll put that link in the questions box so that you can just click on it. All right, so when I said at the beginning, I want this to be you, I really do hope that you can see the difference that you can make when you see these other trends in the market. And when you see, even if you don't use these indicators, and you see a market just collapsing through support or resistance, you can now understand why that might be true, right? It could be these other trends at work. Now, I'm not going to say that you, like Jack, are going to be able in 4 months triple what you've spent on this just trading one option contract, all right? But the point is it's possible, all right? Now, $497 is a full year of the mentoring and the alerts. You do get lifetime access to the course, lifetime access to the monthly live stuff. But if you're the type of person who understands the power of the mentoring and the scans, you can get 2 years for $794, all right? Which will save you $864. But we have one other package that we've been asked to do, so we've done it. I don't know how long we'll keep it at this price, but we have what I would describe as the best deal, which is lifetime. So for lifetime, you'll get all the mentoring, all the scans. You'll already get access to the course and the indicators for lifetime, and lifetime access is $994. So that's essentially going to save you the $1,100 a year if you wanted to continue with all the mentoring. All right, so again, I want this to be you, and I want you to be able to write us just like Dylan did, saying, after becoming a Triple Play member, my trading has improved dramatically. All right, now I don't expect to get this email from you, but I just find it very apropos to what a lot of traders are thinking. Whenever someone writes us, we often will say, look, can we share this with someone else? So Doug wrote back, of course you can. This morning paid for MMM subscription and my Triple Play enrollment. But I love this part of it. Tomorrow's another day. At least I'm not sitting in my a pool of my own sweat wondering just what happened to my portfolio. All right, he has insight now that he didn't have before. And 2 more bonuses. If you act now, you'll get immediate access to an accelerated implementation training. So in this, I was in the market live and looking at trade ideas and showing people how to quickly identify patterns with the most profit potential, identify setups that could trigger trades each day, and how to apply the Triple Play indicators to setups you may already be trading. And if I were to sell that by itself, it would be $397. Last bonus, fast action bonus. There's also a session where we focus specifically on intraday trading tactics so that you can minimize your risk, identify the best days to enter or exit, and take advantage of that intraday volatility. So you can get all of this for that $497 at the special link. All right. Now, as a Metastock member or a Metastock user, you get even more. So Metastock has the expert advisor. So the expert advisor, if you're a Metastock member, you already know. If you're not, then just quickly, it will give you a description of what the condition of the leadership is, the volatility, and the volume, and it'll give you a score, bullish and bearish rating. So you can pull up any stock and quickly be told what to focus on. In addition, the Metastock platform will scan, just like it scans for Bollinger's. We built in, thank you, Geoff, for building in triple play scans. And so you can do all kinds of cool stuff. I just gave you one example. If you're an options trader, you could just scan the optionable stocks for stuff that has the strongest and the weakest trends. You could take Bollinger's scans, scan for the squeezes, and combine it with this. All right, so you can't do this on any other platform. This is incredibly powerful. And so if you're not already a Metastock member, that would be a good reason to get there. If you are a Metastock member, then please know that you've got these unusual abilities, and that's it. So I do see a couple questions, but I think I've used up all my time. And I want to thank everybody for being here today, and I hope that these two trends will enlighten you in terms of looking at market action going forward.
All right. Thank you, Geoff. Appreciate it. Good job. We did have a question that I can answer. I have triple play. How do I get Metastock? Well, go to metastock.com/trading summit 3-for-1, and you can get a special buy one, get 3 months on Metastock. So there you go.
All right, sorry. Someone said they click didn't work. I just clicked on it, and that's what you will see. So it did work.
Thank you for trying. Try again.
Try again.
Yeah, thank you for trying, Anthony.
Oh yeah. So whoever was having the problem, sorry.
Yeah, and Yvonne, thank you for using Metastock. If you just need to get the training and the add-on, go for it. Like I said, I just went through this training a couple weeks ago. I thought the ideas were very well spelled out, very interesting, and very good too. So marketgauge.com/triple play, and that should just be in the chat right there.
Yeah, /Metastock/triple play.
Yep, let me paste it in again for you. It's working now. It wouldn't be the first site we broke today.
Yeah. Well, if you just type in market gauge, it's really easy to misspell. So that's why I put the link in. And so the link should be relatively easy to remember: marketgauge.com/metastock/triple play.
All right. And okay. Thanks, Geoff.
Thank you.
All right. Let me go ahead and kind of let's get on there. Terry, just try again in a few minutes. There are a lot of people in here, and it could be just a little bit busy. So if you're having issues with it, we did test it. It is working. It just might be a little bit busy. Some popular questions that have been coming up today. Are we recording today's session? Yes, we are. Thank you for asking. What'll happen is all 8 or 9 or whatever hours of video we're actually going to re-encode. We'll break them up into the individual presentations, and we'll put them up on our YouTube channel. As soon as that's ready, I will email you personally to give you the link. So other questions that we have are fairly common. Is in terms of the bonus offers. When you signed up, there's a list of bonus offers. Those will be delivered to you from the presenter early next week. So for example, if you took the Modern Trader digital subscription, what's going to happen is I'm actually going to send Modern Trader your information so that they can send you those 4 issues. But I'll do that with all of the different presenters and all of their different offers. I'm going to do that on Monday. So like between Monday and Wednesday of next week, you should see those. Okay. If you want to, I did want to remind you about the Trader's Toolbox. It includes Don Fishback's Odd Compression and John Bollinger's Bollinger Band Toolkit, as well as 3 months access to Metastock, Unleash the Power of Metastock, and a boot camp that I'll be doing the day after Valentine's Day on February 15th at 6 p.m. Eastern Time. Normally, all of that stuff would cost you $921. I'd recommend you get it at the Summit pricing, which is $399. And so there you go. That's the end of day version. If you want to do the real-time version, the cost for that would actually be $590. So take your pick. If you have questions about that or what's included or kind of like what you need, call us. We have a couple of guys that are very nice. They're very friendly. They're also really knowledgeable. So if you have questions, they can kind of talk to you a little bit about what you need and what you're getting and all that kind of stuff. You can give them a call at 800-882-3040. If you prefer to chat online with them, you can visit them at metastock.com/saleschat. So I can't believe how late we're getting today. Modern Trader, thank you for sponsoring me with that. You're doing a great job. It's a great magazine. They've been publishing since 1972. They're going to give you 4 months of the subscription, 4 months of the digital copy of their magazine for free. You don't even have to put in a credit card. So I'm going to paste that link in the description as soon as we get our next speaker talking.